Do you want a financially secure future, not just for yourself, but for your loved ones as well? This is Generations of Wealth, the podcast that breaks down the most effective wealth building strategies you can easily apply to your own life. Join investor and international best-selling author Derek Dombeck in exploring practical tips and sound advice on building a profitable business, creating a powerful brand, or getting into the thriving world of real estate investing. This is your chance to create your very own financial roadmap to live your vision, love your life. Let's begin this discussion with your host, Derek Dombeck.
Welcome to the Generations of Wealth show. I am your host, Derek Dombeck, and today we're talking about money. Something that everybody needs, something that everybody says they don't have enough of. And we've got Amanda Webster from Fund&Grow who's going to teach us how they build business credit and establish business credit lines. So before I bring on Amanda, I'd like to just welcome everybody if this is your first show, and welcome back to everybody that is listening and watching every show. Also would really encourage you to go to thegenerationsofwealth.com, check out everything that we have available there. We've got resources for you. We've got, access to the Transformational Journey book and Next Level Your Life book that I'm an author of. And get out there on Facebook, join the Generations of Wealth Facebook page. Do everything you can to help us grow the Generations of Wealth show and the family and the community. Give us all the likes, the shares, the love. Tell everybody in the world about us. We really appreciate it. And with that, let's bring on our guest. And now I bring on Amanda Webster. Amanda, thank you so much for gracing us with your presence. And why don't you let everybody know a little bit about yourself and also your company?
Absolutely. I'm so excited to be here. So I like to identify myself as a mom of five first, because I feel like that should be the most important thing every day. But I'm also married to a career military man. So my household is always a fun scheduling show of a circus. But no. And then by day, I am the COO of a company called Fund&Grow. We specialize in funding for businesses, and we have a very unique way that we do it with business credit and kind of a creative financing type of way. But I come from a long line of operations. I'm an operator. That's what I do. I'm a process and analytical person, and I love developing SOPs, which makes most people want to fall asleep. But I came from a long run, 17 years in the law industry, legal, whether it was law firms or even in the financial legal world. So I actually did that for 17 years, came right out of high school doing it. I actually graduated high school with my associate, so I was a little bit further ahead than some of my other classmates, and went right to work and just never stopped, never looked back. And then came into this company in 2020 and kind of revamped the whole operation stuff that was going on here and perfected that with my partner in crime and the support of the owner, Ari, who is just an amazing person to be able to be my mentor and help me and support me through this journey. So that's me in a nutshell.
Well, that's a great nutshell. And it's a great introduction. I guess you're piquing my interest, and the whole purpose of our discussion today is to talk about business credit. So let's start at the beginning. What's the difference between business credit and personal credit?
So there's a huge wall that should be between the two, because a lot of misinformation gets out there, right? So, one of the number one things I see people do wrong when they start their entrepreneurial journey is they don't think they have other options, so they use their personal credit. And personal credit has a lot of rules within it. Your credit score is one piece of it, and also it's always different on all the different platforms, so you never really know what your score is anyway. But also what makes up that credit score and what you're actually penalized for, and knowing that ahead of time helps you obviously be a good consumer and keep that score higher. So as an example, personal credit score, you are penalized for using the credit that's been awarded to you. So if you have a $10,000 card and you charge $9,500 on it, you now have a lower credit score. for just using the credit you were given. So these rules are very weird. Also, there's a whole timing of not knowing when your cards report to things or your accounts report to their credit bureaus. So on the opposite side, a business credit is going to be on your EIN. It's like having a credit score, but on your EIN, on your business. And it has completely normal rules, common sense rules. You actually get a higher credit score for using your credit all the way up to the limits and, paying them off and being responsible. And they don't penalize you for hardly anything. The only thing you get penalized for in the business credit world is if you default, which is an obvious one that people know you should be penalized for, or if you don't use the credit. That's one of the weird ones. If you don't use the credit, it actually can affect your business a little bit differently. In the personal world, the only offset of not using the credit you're given is if they shut the account, then you've lost all the history of that account, and that can then make your score lower. So there's just a lot of different rules that go into it. But the most important thing is business credit, if done properly with the right lenders, because there are some that like to cross over, is all on your EIN. It's not showing up on your personal credit. It's not hindering your personal credit. And there's a ton of things that, are beneficial in the business world to be building that business credit and keep going. So, you should be using personal for personal and business for business. And that's like the hard line you should have. And your CPA, your CFO, whoever does your financials will love you for actually doing that, because it's going to make both of them so much more healthy.
Absolutely. And I know that most people cross that line over and over again. And this isn't an asset protection discussion, but we need to touch on the fact that if you are paying for things incorrectly from personal to business and vice versa, it can pierce the corporate shield, and people can prove in front of a court that you weren't operating properly, and many people that get their asset protection knowledge from YouTube University may be very sad to find out in the future that they didn't have what they thought they had until it's too late.
Yeah. Commingling is a problem in all different ways. And I think a lot of people are, get your education from an attorney, from a CPA, from a CFO who has the right credentials. Like get the information from the people who are experts in that world. But yeah, you open that door. Once you do that, it's very hard to undo it if you continue. So you have to make sure that you are very clean in it, in the same way that, using it correctly and being responsible and being able to pay back your debts is a whole different conversation. But being able to separate it is going to protect both sides. Protect your personal, protect your business, all the things. Even if you have a trust, right? There's still different things you have to be careful for in that world. So don't let me educate you, because I'm not an attorney. I'm not a CPA. So go to somebody who has that right area, but it definitely can cross over.
Definitely. And so now we kind of got an idea or a glimpse at business credit versus consumer credit. You mentioned the EIN. So if you've got a brand new company that just established an EIN versus a company that's been around for 10 years, what's the difference? And then does Dun & Bradstreet, which is a credit reporting agency for businesses, does that factor into this?
Yeah. So corporate credit, which is what I put Dun & Bradstreet in. So those vendor trade lines, that's what I call corporate credit. And again, YouTube University, TikTok, Reels, wherever you're getting your information, sometimes there's a little bit of misinformation in all of it. So I call that corporate credit. Doesn't really matter. It is part of business credit. So building a PAYDEX score is essential for your business for long-term funding. Business credit lines will require a personal guarantee in the early stages. Once you build to a level, you'll no longer need the personal guarantee, right? So that's the difference in a super established, seasoned business, is you have more doors that open and less personal guarantee requirements, or even to look at your credit score. So it's one of those things where business credit does have a little merge into personal, only because they will leverage your history to be able to.
Are you ready to elevate your real estate investing game and enjoy an unforgettable vacation with your family? Join us for the Generations of Wealth voyage this February 2025 aboard the Royal Caribbean Symphony of the Seas, a unique no-sales cruise event designed just for experienced real estate investors and their families. Dive into expert-led sessions, exclusive networking opportunities, and enjoy family-friendly activities, all while sailing the Caribbean. Plus, kids ages 10 to 17 attend the conference for free. Register now to lock in our exclusive room rates and save 20% on your conference fee. Hurry, our room block ends October 3rd. Ready for a family adventure that builds your future? Reserve your spot today.
Get the approvals on the business side until you've established yourself with the proper business credit, right? So Dun & Bradstreet is essential. You need to get set up. You need to be actually using those tier 1 accounts to get to those tier 2 accounts. If you don't know what I'm talking about, then it's even more essential that you learn what Dun & Bradstreet is and how you build a PAYDEX score, because that's actually another area of capital. These are net accounts. There's no interest on these types of things, right? So they're net accounts. You're going to Amazon and you have $10,000 in vendor credit. You can use all $10,000, again, not hurting you. It will never be on your personal credit. There's not even a personal guarantee requirement for the vendor side. The difference is you have to build. So you're not going to start with $10,000 over there. So super essential. It's one of the key factors to get to non-PG, really high levels of business financial, accounts that are available. So business credit on the major lender side, like your Chase and your Wells Fargo and your Amex, the things that Fund&Grow specialize in, that's going to require a personal guarantee again until you're at a certain point. The amount of funding available is going to have a couple different layers. The seasoning of your business is a huge piece. The setup of your business is a huge piece because there's different industries that are considered risky for even business credit lending. Your personal credit is going to be a piece of that and how you've utilized it, not just your score. I don't just look at a score to know if you're going to do well in this world. And just knowing the right strategy is super essential for this type of funding. And then actually leveraging relationships you have. Business is all about relationships, right? In every aspect of what you do. Business lending is the same way. If you have relationships with lenders, those are the ones you're going to want to go to for business credit because they're going to actually lend to you a lot easier because they're used to your spending, they're used to your history, and they trust you basically at that point. And you can get a lot more sometimes with those relationships that are already existing, which is where established businesses kind of have like a little upper hand on that side.
So what kind of interest rates are we talking about when you establish business credit early on with a newer business versus once you're established?
Yeah. So a brand new business can get business funding. It's not, we do that all the time. It's kind of on our areas that it's a niche area that we specialize in helping. But you are going to have sometimes lower than your more seasoned people. But the interest rate is going to vary on your profile, right? So it's going to vary in the business credit side. It's going to vary anywhere from around, I think 12% is probably the low average, but it can go just like a personal credit card. It can go up to 25. I think personal credit cards are getting in the 30s right now. So it can definitely go higher, but that's going to be based on the profile. Now, the more seasoned, the better profile, the better business setup you have, the lower potential for that to be. So it's kind of everything is based on what do you have going on, both in your business, your personal, and then your relationship. So, but when we look at that, going in, when you apply for these types of offers, you know exactly what you're getting and do the research. We do a lot of research for our clients so that they don't have to, but if you're doing it on your own, do the research. Make sure you're double checking things. Check for annual fees, for any additional costs that are built into these types of funding, because sometimes they do sneak in there.
And there are some people that kind of play, and this is on the personal side, so I'm not sure if this will transfer over, but they apply for credit cards, kind of the interest rate starts at 0% for a period of time, and then of course it goes up after that. But is there those possibilities in the business credit side?
Yeah, that's all we do. We only apply for offers that have a 0% intro side. I don't like to highlight it as much just because you eventually are going to have interest, but On the front side, you're going to have a 0% offer. The average is 12 to 15, 18 months, somewhere in that range. We do get offers occasionally that'll go 22 to 24 months. That's not all the time, not seeing them as much right now. And as low as 6 months offers are out there. But again, you know all that going in. When we're doing it, that's all we do. We're only going to apply for 0% offers unless the client is specifically looking for a certain card, for a prestigious card, or one that has these really good, like your Amex Platinum, right? Like that's a card that people want because of the perks that come with it. It doesn't have all the same, mechanisms that the regular, the business blue Amex. So we only target 0% offers, and we have hundreds available to us because I have one employee, that's all they do is just search for these offers and make sure that we have the most competitive and the best offers on the table. And we actually even leverage multiple offers for the same lender to be able to merge and extend 0%. So it's one of the things that we've learned over the years to kind of play the game. So 0%, you should never, if they're out there, you should never apply for a card that has an immediate interest rate, right? You should always try to find those 0% offers, both personal and business. And there's probably more available on the business side than there is on the personal.
So what if people have a weak credit score? Is there any opportunity to get 0% interest business credit?
So it depends on the why. Like, why is it weak? So it's a little bit harder of a question to answer on a broad scale. So basically, if you come in, the requirement for business credit is going to be a 700. Now, there's a little variance. So we say 680. 680 or above is what we're looking for to be ready for funding right now. Let's say you have a 640. That does not mean that you can't find those credit points pretty easily. A lot of it is intricately understanding your personal credit and what's affecting it the most. So when we look at pre-quals, we're not looking at your FICO score. That doesn't mean anything to me because what I need to look at is very intricate pieces of information. So when we do soft pulls on clients, we're actually looking at raw data. So raw data is coming into our system and we're interpreting it in our way, the things that we know are important to the lenders that we work with. So our pre-qual is a very custom one, but we're looking at things as an example. Some people can have an 850 credit score, which is like holy grail, right? So amazing. But they have 6 new accounts in the last 24 months. Chase is going to deny them, and there's no way of getting around it because they have a 524 rule. If you don't know that going in, you go apply to it. It's a wasted application. It's a wasted inquiry on your personal credit because, again, there is a personal guarantee. They are going to look at your credit. So being very careful. There are companies out there that apply for 15 cards at one time. That is going to detrimentally affect your credit. That is not what you should be doing with business credit. There is an art to credit card stacking that we do, but within the means that makes sense, because our goal is to improve your personal credit positioning, not make it worse. And so understanding all of those pieces is kind of how it goes. So there's no magic number. I always tell people, now, if you're in the 500s, you probably have something kind of big sitting on the report. And if you don't know what that is, how can you fix it, right? So I tell people, if you're seeing your credit score and it says that and you can't figure out why, you need to call somebody who knows what they're doing. We do free consultations so that people can understand where they're at before they ever pay us, right? So understanding where you're at and how to get out of it. So we never turn anyone away. We're always saying, okay, you can't sign up today, but here's what you need to do. You can do it on your own. You can go consult a credit repair company or credit restoration company, and they can help you, but also have patience because credit repair takes time. So if you're in the 500s, there's something major. You either have a huge charge off that's sitting there. You have really large medical collection accounts sitting there. You have a bankruptcy, something's going on that's causing that big issue. And then the reverse, a brand new person, right? If you don't have any credit, you're either, weirdly enough, there are people well into their adult life who've never established credit because they always thought cash was king, or they were a stay-at-home parent and never needed the credit, right? The other spouse always held it. And then a life event happens and it changes. So we actually consult for free for people who need to build credit in general. So it's just understanding what's going on there, because you could have a one authorized user account and show that you have a 720 credit score, but it's a fake score. It's not real because it's not your credit and it's not going to work. So it's more about the specific details within the credit that matters. And so I always say we can build a funding plan for anybody. You might have to have some patience and do a little work ahead of time.
Yeah, I've never been known for my patience, but what about people that have been through a bankruptcy or foreclosures or things like that are in the past and now their credit scores are up?
Yep.
But is there a certain time frame that you look at, a certain number of years or months post post foreclosure?
Bankruptcy, foreclosure, I would look at almost the same because there's some same, similarities of what it did to your credit. So obviously there's a lot of people that in 2010, 2011 have foreclosures. So that's not uncommon for us to see because 2008 happened and obviously it took years for all that to come out. It needs to not show in the report any longer. So it needs to be off the report, which is usually where most people are at that had a lot of that major stuff back then.
Does it automatically fall off after 10 years?
Yeah, so it'll fall off. But here's the key. It'll fall off the report, but we're still going to ask you the question because it depends on who you burned in that process, right? So if your mortgage was with Bank of America, they're not that forgiving. So even though it's on the report any longer, it's in their system. They're going to see it. They're going to know it. So it's actually about rebuilding the relationships. So if you had a foreclosure with a major lender or you did a bankruptcy and you charged off some of the debt from a major lender, it's what you do post-bankruptcy that matters. The score itself matters, but only to a certain extent. So did you rebuild the relationship? A lot of people didn't know they should or didn't know how. So I always tell clients, if you had a detrimental relationship with one of the major lenders, see if they'll let you open a secured card. Go open a secured account and try to rebuild. Or that's just one you have to avoid. And that's part of our process and making sure the strategy is correct by asking those difficult questions. So you want to make sure that you're looking at all those pieces because there's hidden things in the background that we can't even see having the access we have because it's been 11 years and it's no longer showing up.
Right. Okay. So obviously there's advantages to having business credit over traditional funding options, but we like to talk about both sides of the coin.
Yeah.
The 0% introductory rate expires, and then all of a sudden now you've got 12, 15, 20%. What are the advantages and what are the disadvantages?
So one thing about business credit is it should never be a mechanism for long-term debt holding, right? So if you're doing it to replace something that's a long-term need, it's not going to work for you. It is going to be, that cost of capital is going to be higher. So it's for temporary housing purposes. So either for someone like Fund&Grow, we use it like a charge account. We're racking it up all month and then we're paying it off when the statement drops, right? Because we're using it for marketing and things that are actually generating revenue. People in the real estate world, if they're planning on refinancing anyway, sometimes they'll use business credit to close on a property so it looks like cash because we have a whole process on how you can do that. When you do that, then they know they're going to rehab and then refinance because refinancing is easier if you already own the home. So it's temporary. It should be something you're using for ROI that can happen quick enough to offset or before interest hits. So I'm not, naive. Most people can't return something in 30 days, meaning, a return on the investment. So if it takes 60 or 90 days, you have to factor in that cost of capital. And what does that look like? And how are you offsetting that through what you're using it for? So there is a strategy. And then additionally, there's an entire world of points and rewards that you should absolutely be aware of. Because I can tell you every quarter, we receive cashback checks that go into our business account of like $10,000 to $15,000 from what we're using. So I look at it as free money because very rarely do we pay interest because we're using like charge. And now we're getting paid back by using the accounts that we would have spent anyway, right? We would have spent it out of our business account either way. And now I'm able to offset any potential interest I may have had for a minute if you have a bad month or something, by the rewards that I'm getting from it. And I use that philosophy in my personal life as well, because there's a whole point game on the personal side. The CEO has literally traveled across the pond, all different.
Are you ready to elevate your real estate investing game and enjoy an unforgettable vacation with your family? Join us for the Generations of Wealth voyage this February 2025 aboard the Royal Caribbean Symphony of the Seas, a unique no-sales cruise event designed just for experienced real estate investors and their families. Dive into expert-led sessions, exclusive networking opportunities, and enjoy family-friendly activities, all while sailing the Caribbean. Plus, kids ages 10 to 17 attend the conference for free. Register now to lock in our exclusive room rates and save 20% on your conference fee. Hurry, our room block ends October 3rd. Ready for a family adventure that builds your future? Reserve your spot today.
Places for free with the points and rewards that come in. So, that's a big piece of it. Of if you do need to hold it for a minute, make sure you're using cards that actually are going to give you a return for using the money that kind of offset that capital cost.
Yeah. And I mean, on the personal side, a lot of our airline miles and all that stuff, we absolutely utilize cards that are gonna build onto Delta and other places, because we're spending the money regardless.
Yep.
So, but it takes discipline and budgeting to do that, and obviously, we're hoping that our audience is entrepreneurial, but also business savvy enough to be able to budget. But life happens, and sometimes this can be the crutch that can get you by for a little bit if you have to. I mean, most of us entrepreneurs have peaks and valleys. We don't have a nice steady Eddie type of business. That's just not in our nature. And if we do, we go screw it up somehow and take on something more just to get stressed out. But I would also say that the business credit, the way you're describing it, and if it's used properly, compared to using a hard money lender in the real estate world, is equal to or less expensive. And again, has to be used properly. But are there specific industries or types of businesses that are more beneficial or to try and establish business credit in, or maybe not beneficial, but easier to establish credit in?
So I can tell you there's two industries that we can't fund. That's where I usually like to start to make sure I'm very clear. And that's my 2 C's. I cannot fund a cannabis direct or a crypto direct. Crypto more because you can't actually use the funding typically in anything that you're doing in the crypto world. So I cannot fund those at all. I'm very clear about that. I've definitely had some people that have more than one business and one of them was in cannabis. I couldn't help that business at all. I would say that we actually have found a way to creatively fund pretty much agnostic across the board. I have not had any issues with it. Weirdly enough, I think I actually see more success with service-based industries than I do with product, which is a little bit bizarre, I feel like. But I think because the business credit world, I think, is used to service. They're used to that. And then we're very, very successful in the real estate industry just because we have taken a majority of our time here since 2007 has been helping entrepreneurs in the real estate sector in all different areas of that sector. So we have kind of fine-tuned and crafted our type of funding for that world because of the limitations. And I also tell people, listen, we may not be the only thing you do, right? You should have whatever capital you can get that's not going to break the bank on the cost of capital at your disposal, right? So I'm not saying that we're the only option. I think that we are sometimes the only option without giving up equity, and the cost of hard money can get a little bit pricey. And I know a lot of those people and they're great. And sometimes you need both. I've got people who $250,000 in business credit isn't going to help them because they are rehabbing high-end homes. So they need the hard money side to be able to purchase the property, but then they use the business credit to actually rehab it. So sometimes it's a supplement or it's just part of the toolkit. But I think you should always look at every option because capital is the number one thing that fails a business. Not having it is what will fail you. So this is the type of credit that you don't have to use if you don't need it. It's there. Now, I will say, just like your personal credit, Use it every once in a while so it doesn't get shut down. But just use it for, your gas to drive, to whatever you're doing, or use it for your office expenses if you have like an Amazon account or whatever. So it's definitely sometimes a supplement, but it's a huge area of capital that you shouldn't discount. Just make sure you plan accordingly.
So you mentioned $250,000. What do you see the majority of small, we'll say small business owners coming in and establishing early on with a decent credit score and a decent business versus where can they get to?
So our average for the first round is kind of big because we deal with so many different profiles. It's anywhere from 30,000 to 100,000 in that first round. And that first round, if you're ready to go, we can get you to within like 5 business days. It's pretty quick. We can get you to applications. Our goal for everyone is to get them to 250. Now, obviously, I can't always hit my target because I'm dealing with some people who have some blemishes and things going on.
Mm-hmm.
So I would say the average that's exiting is at least getting around 100 or more, 150. But again, we're very transparent. So we're telling them, listen, these blemishes are going to limit what we can get you. The fact that you had a bankruptcy with Chase limits that. And Chase is one of the heavy hitters, same thing with Bank of America or American Express. So we're very open that, but our goal is to get everyone on that 250. And then we also are giving them the tools to build that Dun & Bradstreet PAYDEX vendor side. Our goal is for everyone to get to 100,000 in that during the 12-month process that we're working with them.
So you work with them for 12 months. Is it a flat fee service? Is it based off of how much that you help them establish their credit? What does that look like?
So our models, it's the one thing that probably sets us apart from anyone else in our industry is we have a combo. It's a done for you mixed with a done with you. So we're doing everything we legally can for you. And then we are coaching and educating you and doing with you the remainder of it for those 12 months. So we charge a flat fee. We do not charge you anything on the backside. We do not charge you points. If you get a $200,000, you're paying the same as if I get you $300,000. Our goal is to get you as much as possible. So our flat fee is normally right under $4,000. But for people like you, when we have events that we do and things that we come on for, we offer a $500 discount to that. So it ends up being $34.97. It's a flat fee. We do have payment plans, but our goal is to get you as much funding as we can in that 12 months. We also offer, if anybody does have that like lean profile where their personal needs a little bit of just extra credit, they just don't have enough, we actually will give them an 18-month membership for the same price, and we'll do the building on the personal with them on the front side. They have to go through a 6-month process and then start business credit from there. So we offer that because our goal is to get everybody to business credit. That is what we're here for. And then we do have a 60-day money back guarantee in case someone signs up and we can't help. We're going to be very transparent and say, listen, you have a 520 credit score. You got a lot of work to do. We're going to give you your money back. Go work on it and come back when you're ready.
Yeah. And you also mentioned earlier, and I know that you told me you'll do a free consultation call. So anybody that wants to go to thegenerationsofwealth.com/credit, you will be able to get linked right over to Amanda and her team, and go have that free consultation call and look into this. For me personally, and most people that have been listening to me for a while know my backstory. I did establish business credit in the mid 2000s, but then also went down with the ship when everything crumbled in the late 2000s. And so since then, I mean, myself and my wife, we've reestablished our credit and our personal credit and everything else. But I still, to this day, I don't have established business credit lines in the traditional sense that you're proposing. And, it is something that I do need to start taking a look at as well. I think most of us kind of get into a position where we get used to what we know. And I'll be, real honest with you and everybody listening. Like, I don't use institutional lenders for anything currently when it comes to real estate investing or my business. And that's not to say I won't. It's just to say I haven't had to. But having this stuff established so that it's there and ready to go. And you piqued my interest on a few things too, because yes, we use the points programs and things on the personal credit side and take advantage of it. I've not really thought about the business credit side of that and the perks, because it's one of those out of sight, out of mind things, which is why I love hosting this show, because it's so self-serving for me and yet helpful to everybody else listening.
No, and it's absolutely true. I will tell you the biggest bonus of that. So I'll use Amex because they're my favorite, right? I love my Amex cards that I have. The beautiful thing about the points is you can it's all combined because there is a personal guarantee. So you're all in one app, you're all looking at everything, and you're able to separate it, but then benefit on both sides. So it's a huge thing. It's not the only thing, but it's a huge offset so that if you do have cost to capital, if you do have to, have a little bit of interest or pay this small fee to pull money off the card type thing, that's the benefit of doing it. And then on the other side, it's my golden rule in personal. I don't use my debit card for anything. I will not pull that. I don't even know that I have it half the time because of it's connected to my cash. And that's a scary thing. It's the same aspect in business. A lot of business owners are using their business debit card tied to their operating account for their purchases. It's the same theory. Why are you doing that? Why are you connecting those purchases to your cash flow and looking at, if somebody gets a hold of that number and they take 10,000 out of your business account, it is not an easy process to get that back.
No, it's happened to me.
Yeah. And so do the same rule. Everyone's familiar with it in the personal side, but for some reason, they don't have that aha moment of wait a second, I'm doing the same thing to my business account and I have way more money in that account sometimes. It's also protecting that and being able to keep your cash safer, I guess is the best way I can say it, for money you're already using. You're using anyways, and you can pay it off every month. You don't have to, you can pay it as soon as on the business side, you can pay it as soon as you get it, right? So you charge $10,000 for some purchase or book some, big event, and then pay it out of your business card over to your Amex. That's not going to hurt your business score or anything. On the personal, there's some rules. If you don't let it hit the statement, you don't get credit on the business, on the personal credit score for that. You need to let it hit the statement, then pay it. Business doesn't have that. If you, every week, we do weekly payments typically on ours. So the CFO goes in every week and pays the cards off every week, whatever's in there. And that way we're getting the points, we're still paying them off. And if, we have a month that's kind of questionable and it rolls into the next one, it's not a big deal. It's a little bit of interest, but we're offsetting it with the points and stuff we're doing. So there's a lot of different pieces to it. Get yourself a VA maybe to keep track of all of it.
Yeah, that's not a bad idea, honestly. Because this is what probably holds back most small business owners at all that don't have staff or have limited staff, right? It's one more thing to think about. And I'll just mention my wife who does our bookkeeping for our companies, because we both have a little PTSD from 2007. And you start looking at it and saying, well, God, what if something like that happened again? And we don't want to have all of these business lines established where the 0% interest rate period runs out and now you've got these big payments. But on the flip side of that, and the pro argument for having it is, that could have saved a lot of people's asses when COVID hit, right?
Yeah.
If you would have had business credit established and your tenants weren't paying the rent, or fill in the blank with whatever happened to you. And many, many people went down during COVID because they didn't have anything established.
Yeah, we hit a huge peak because we became one of the only options for those businesses. So COVID became crazy here because we couldn't staff fast enough. It was just so many, and we did it. We were able to accomplish it. We were able to get through that wave and helped as many people as we possibly could. But if you wait until you need it, it's not there. And so some of them, the process that it took to get it and get enough to make it make sense, it was too late. So I'm not trying to hard pitch or hard close anybody, but it's always a thing of you should never lose a deal because you didn't have the capital. You got to establish it first and have it ready.
Well, we were running I co-owned a hard money lending company up until the 1st of 2024. And when COVID hit, all the national hard money lenders who sold their paper to Wall Street
Yep.
and the hedge funds they couldn't sell their paper. Our applications went up by 400%.
Yeah.
And it was the same thing. People did not establish additional options for funding. In our case, hard money funding. They just always used the same one. But when that one option went away, and it was great for us. We could cherry pick, we got the best loans that we wanted, but it was not fun for us because we had to turn down a lot of people. We didn't have enough, funding to go around either. So no, all this is very valid, and it literally does not matter what business you're in. This is very important for every business owner out there.
They just don't know. They just don't know how to use it. And so that's our job. That's what we've spent, 17 years figuring out and honing in and learn from our mistakes because we've already made them.
Yep, me too. That's what part of this show is all about. We teach from our experience, and we bring on guests that had experiences that we can teach from as well. And so, well, Amanda, I appreciate your time and your knowledge. I do like to ask the one final question is, what's one question I should have asked you that I didn't? And it does not have to be related to Fund&Grow or business credit. It could literally be about anything, but.
So what is the one thing that stops people from growing? And I'm not even going to say capital because that's an obvious answer, right? The one thing that typically stops an entrepreneur from growing is letting go and hiring that first person to help them. And that's something I keep seeing on repeat. I go to a lot of events and do a lot of things. And I see an entrepreneur who just wants to stay a solopreneur because they can't let go. They just can't let go of it. So that's something that I think that everybody who's listening should really think about. If you're the only person or if you only have one staff as an entrepreneur, you should just take a list and the top 3 things that you're really good at, that's the only 3 things you should do. Everything else you should outsource in some capacity because it's the only way you're going to grow.
Amen. That is a fact. And I was that solopreneur for so long who did not want to have staff. And now I cringe every time they want a day off. Well-deserved day off, of course. But as my staff is listening to this and editing this, a very well-deserved day off. But it's just a fact.
Yep.
We only, what makes every single person on earth equal is we only have 24 hours in a day. And there's only so much you can do. So, well, I appreciate it. Again, everybody, go to thegenerationsofwealth.com/credit. You can get linked over to Fund&Grow and get a free consultation call. Look into this. If you do it on your own, great. But if you're looking for the people that have, figured this out, and I met, I didn't meet Amanda, but I met other representatives of Fund&Grow several years ago, and long before I had a show, and at that time was very impressed. So I'm really glad that you came on the show, and thank you very much.
Thank you for having me. It's been great.
Awesome. So we'll wrap this one up the same way I wrap up every show. Please go out there, like this, share this, spread the word, help us grow the Generations of Wealth family. Jump on Facebook, join the Generations of Wealth Facebook group. Anything you need can be found at thegenerationsofwealth.com, including our resources tab. If you want to get a free copy of my books that are over my shoulders, you can do that. And until the next show, go out, live your vision, love your life. See ya.
Are you ready to elevate your real estate investing game and enjoy an unforgettable vacation with your family? Join us for the Generations of Wealth Voyage this February 2025 aboard the Royal Caribbean Symphony of the Seas, a unique no-sales cruise event designed just for experienced real estate investors and their families. Dive into expert-led sessions, exclusive networking opportunities, and enjoy family-friendly activities, all while sailing the Caribbean. Plus, kids ages 10 to 17 attend the conference for free. Register now to lock in our exclusive room rates and save 20% on your conference fee. Hurry, our room block ends October 3rd. Ready for a family adventure that builds your future? Reserve your spot today.
Thank you for joining us on another insightful episode of Generations of Wealth. May your newfound knowledge help you in leveling up your own strategies to get through the many obstacles to your money-making processes and bring you much closer to the financially secure life you truly deserve. Continue filling up your accounts and further polish your financial tactics by listening to more episodes of the podcast at thegenerationsofwealth.com. Because in your wealth building journey, there is no other way to go but up, giving you the chance to finally live your vision, love your life. That's all for now. See you on the next one.